Low-value shipments are no longer duty-free, and trade policies remain in flux. Yet logistics giant FedEx says it's ready for growth and doubling down on cost cuts. To find out from FedEx's playbook, let's join Roland Lim at the Bloomberg New Economy Forum. Roland?
Thanks, Rachel. Tariffs are really changing the rules of the game, but FedEx is changing with it. Now, it's reinstated its full-year outlook. It's on track to reduce costs by $1 billion in fiscal 26 and plans to spin off its freight business by next June. Raj Subramaniam, President CEO of FedEx, is here with me now to discuss more. Raj, good to have you on the show.
It's great to be here. Thank you very much.
So you brought back your full-year forecast, but you're currently in a quiet period, so no earnings guidance. But let me put it to you this way. What's the industry outlook for the logistics and freight business as you see it for 2026?
Well, I think, we are in a very fast-changing world as we speak. You specifically talked about FedEx. We also, we're projecting now in this current quarter that we're going to be up year over year versus the last year, for the same quarter. As far as the industry goes, the globalization trends, there's changing from one set of pattern now to another, and we are in the middle of this transition. And I think the supply chain patterns themselves are changing, and those with established networks in place stand to gain because new markets are emerging, new trends are emerging, new lanes are emerging. Right here in Asia, 18 of the top 20 lanes are right here in Asia. We're seeing, we are already making changes and in investing in flights directly from Singapore to the US and back. We have added capacity between Taiwan and Korea. We have put in Vietnam, in Thailand. So we're making these changes on a rapid and agile basis. For me, I think those folks who react in an agile manner will win in this kind of environment.
Will you be adding more flights in 2026? I mean, routes between, say, the US, Europe, intra-Asia, as you mentioned, as well as, say, the Indian corridor?
We will be looking at all options, but most importantly is that we get the information from the bottom up. Because, as I said, the supply chain patterns themselves are changing, and we are a referendum on global supply chains every single day, and we see it from the bottom up. As we see trends changing, we'll, of course, change the nature of our capacity in different parts of the world. As for adding capacity, that just depends upon how the demand pattern evolves.
Okay. Supply chains have been rather resilient, would you say? I mean, when tariffs were implemented earlier this year, we did see a lot of front-loading, so numbers were good. I mean, it's only towards the end of this year we are seeing export numbers maybe coming down a little. What's your outlook for 26?
I think, you used the word resilient, and that's very important because I think to be resilient in this kind of environment, you have to be able to work hand in hand with physical networks and technology to make sure that we can have the best possible information in the world. I expect next year to be more of the same as what we've seen this year. But we'll have to see. This is a very dynamic environment. It's very difficult to predict how that's going to play out. And I think the most important thing right now is to stay agile and to see how these patterns are changing.
What's been the fallout from the de minimis rule being taken away? I mean, are you seeing, for example, lower volumes from business to consumer packages, or are you seeing slower clearance rates for parcels?
So I think with the de minimis going away, there was an instant reduction in the B2C part of the equation. I've also been very impressed by how these B2C players have quickly changed their business models in the last few months to adapt to these changing conditions. And as far as the number of packages that have to be now formally cleared, of course, have increased post the de minimis rules changing. What FedEx is doing is with investing in people, investing in technology to make sure our customers' supply chains are continuing to be as streamlined as possible in these dynamic and changing conditions.
So apart from, say, upfront customs clearance that you're doing for your customers, what else can you do to make these parcels go around the world faster?
Well, I think the whole point here is because of the fact that now most of these packages require formal customs clearance. They need classification codes. they need the right classification code. We are using our data and Gen AI to be able to predict those right classification codes into the workflow for our customers. That makes this process as streamlined as possible. We're also adding, brokers to make sure that they get as quickly through the system as we possibly can.
Okay. You're targeting an ambitious cost reduction program. You are saying that you're going to reduce costs next fiscal year by $1 billion. What's been the low-hanging fruits here for you? I mean, what methods have been working for FedEx?
Well, we have actually reduced our cost structure by $4 billion in the last 3 years, and this is an additional $1 billion over that $4 billion. So we've, this has been a long, hard work. At this point, the 3 levels of transformation that we are under. The first transformation is networks transformation. We are putting not only the U.S. domestic networks together, but also reshaping our international networks. Second, we're going through an organizational transformation. We had multiple, organizational structure. Now we're going to one FedEx. And third is digital transformation. So all these 3 transformations are underway at FedEx.
So big changes. One of the biggest has to be in June. You are going to be spinning off your freight business. This ring fencing of your freight business, have you encountered any problems? And also after the split, what happens to the extra costs for, say, for example, your express and ground businesses?
Well, what we envision as we spin off here is we're going to have 2 world-class companies. We are very proud of what we have created with FedEx Freight. We started off with multiple acquisitions. Now it's the market leader in the United States, and for the LTL business. And with the spin, with dedicated sales folks, with dedicated technology, we're going to further improve the customer experience and essentially make that company really a solid functioning company with its own focus. Similarly, for the Federal Express, that we're going to have a fantastic strategy. As I told you, the 3 transformations we're under, that's going to really power up the Federal Express company as well. So we're going to have 2 solid companies that move forward starting next year. And
the other growth driver has to be your data AI arm, which is DataWorks, and you are actually producing digital twins with your service provider, ServiceNow. So you're essentially creating a system whereby you can predict delivery problems before they actually happen. How's that working out for you?
Well, let me just clarify something there. I think from our AI journey started actually back in 2020, even before we knew AI's revolution was coming, because it was all about, we knew that the data that we were sitting on was very, very valuable. And we started organizing and engineering our data using this FedEx DataWorks. Then came the revolution of AI. So we're using AI to first, of course, enhance our efficiency, but most importantly, to differentiate our offerings for our customers and, enhancing predictability, enhancing visibility, like you said. And then there's a third layer, which is now collaborating with other companies to create new value. And that's where ServiceNow comes in. ServiceNow is a horizontal workflow orchestration platform. Supply chain is one of those pieces, and we are the vertical of supply chain that comes together. So that's a whole another thing that now we're working on. So there are all the 3 layers in which we're thinking about AI.
And on the shop floor as well, you have partnership with Nimble, which is warehousing robotics, and also truck loading robotics, DexR. I mean, has there been any hard return on investments for those?
So the dexterity is what we were talking about for truck loading and unloading, where this is one of the most difficult robotic problems to solve. And because can you imagine trying to load a truck with packages of different sizes, shapes, weights, and everything else? And we're about to solve that problem right now. And so this is still in the solutions phase, but we're excited about the progress we're seeing there. And it'll work hand in hand with humans to make sure that their job becomes much more efficient and effective. And similarly with fulfillment, we think there's an opportunity that we can exploit as we move forward.
Okay, Raj, it sounds like you have your hands full next year. And that was Raj Subramaniam, President CEO, FedEx Corporation.